Welcome back this Easter weekend. Joe Vaclavic and Chip Nellinger joining us to talk markets. Joe, we saw a rally on Wednesday, but really more mixed trade throughout the week. Is there one thing fundamentally that's moving the markets right now?
Fundamentally, you could still point to demand for corn out of the United States, which has been pretty strong. We're really the only game in town on the export market. Brazil is not going to have much corn to offer at competitive prices until midsummer after that second corn harvest. Ethanol production's good. The soybean rally has been puzzling, to say the least, to some people. You know, you've got the negative tariff headlines, yet you've got a market that's rallied sharply. So I'm not going to complain about how the markets are acting in the backdrop of the trade war.
Yeah, Chip, do you think there's enough fuel there for the market to continue its upward trend?
Yeah, I really do, Tyne. I mean, there has been a lot of planting activity starting this week in areas, particularly central northern Illinois and to the north and west. A lot of planting activity. To the south and east, obviously, I think that's been something that's been supportive, and there's more rain coming in those areas that have had, you know, some historic flooding. So that's not a good situation from them. Could mean maybe a few less corn acres down there and switching back to beans or wheat. But yeah, I agree with Joe. I think the fundamentals now with this 90-day tariff pause, the fundamentals are back in play and a strong demand on corn. Also getting a sense and talking to producers that they pulled some of the rain out of the forecast for those dry areas of Kansas, Oklahoma. And I get a sense that wheat conditions are about to take a turn for the worse here in the next couple of weeks, unless they get some immediate rainfall and some relief there.
Joe, let's get into planting a minute, okay? Because planting progress could make a huge jump on Monday in places like Iowa, Illinois. We have had a wide window to plant. And I'm actually hearing from some farmers that they're switching to more corn in season just because planting is going so well. Do you think that is factored into the market right now?
I think so. I think anybody who follows corn market fundamentals is aware that a lot of corn acres will be planted. USDA told us that in March. And I think anybody who's paying attention is aware of at least the idea or maybe probability that the June number in corn is higher than the March number because of budgets, because maybe of weather in the Western Corn Belt, which has been fairly decent for planting right now. So I think the market's aware of it. I feel like we're trading other things almost.
Yeah, Chip, planting progress, just real quick before we move on from this topic, if we do see a huge jump in progress on Monday, does the trade watch that very closely anymore?
Yeah, they for sure do. But I think to Joe's point, they're kind of expecting it, right? The Twitter feeds now, or the X feeds and the news, the amount of information that flows out of farmers' tractor cabs is unbelievable. So I think the market kind of knows the progress that we've made. And I think it could maybe put a little bit of a headwind against us here, against this market, maybe stops the straight up rally that we've seen. But to Joe's point, I think it's in the market. I don't think you have a huge setback. I think the demand and other issues are kind of at play here. And maybe one of the things is this 3-year low in the dollar is kind of keeping a bid underneath of all commodities. And until we see a reversal in that, unless we see a reversal back higher in the dollar, we still have really good support in any break, especially into the face of planting here in the next few weeks.
Yeah, as we see this dollar, the US dollar, continue to decline. Joe, do you think that trumps any tariff and that type of talk in the market right now? Could that spur more exports?
I think it could, for a number of reasons. I'll try to tell you a long story very quickly. A lot of foreign countries are dumping U.S. bonds and treasury holdings, and at the same time, the dollar is moving lower. And I think a lot of it has to do with the trade war. Whether you like the trade war or not, I think global leaders and global governments don't like it. If the bond market falls far enough and there's enough liquidation there and there's enough, call it, lack of confidence in the United States, that means that interest rates would go higher. If you get yield on the 10-year treasury up to, call it, a 4.9% above where we peaked in January, that's a point where the Fed may step in and very quietly, or maybe not so quietly, begin quantitative easing again. And that's something that I think large money managers would see as being very friendly to commodity markets.
Fascinating. All right. Well, we are seeing more countries say they're ready to negotiate with the Trump administration when it comes to tariffs. We're going to talk about that right after the break.